An opportunity like this doesn't come around very often, and most people will miss it. Ray Dalio has been warning about a recession, and if it does happen, it could be the greatest wealth transfer of our lifetime, but only for those who are prepared. That's why in this video, I'm going to walk you through my personal game plan on how I plan on turning a downturn into an upside and how you can protect yourself too. Ray Dalio is the founder of Bridgewater, which is the largest hedge fund in the United States, and he gave an interview a little while ago where he said that America is entering a death spiral. And according to him, this is going to come with economic pain because of three reasons. Reason number one is our national debt here in the United States is growing faster than the economy.
However, when debts rise relative to incomes on a chronic basis for a long time, it's like plaque in that system accumulating. Think of it this way. The more debt and debt service you have, the less money you can spend out of your income. So as it rises, right now for the U.S. government, it's almost $1 trillion a year that goes to interest payments. So it's sort of like plaque that narrows that, and it's a problem.
Reason number two is that when the United States keeps borrowing more and more money, there has to be a lender to the United States, and this is where he says we're facing a supply and demand problem where we're borrowing more debt than there is demand.
When you run a large deficit, you have to sell debt to do that. And the quantity of debt sold has to come up against how many buyers are there. And when I calculate it, the quantity of debt sold to be sold is much greater than there is the buying power, the inclination to buy.
This is why the Federal Reserve Bank has to keep printing more money to lend money to the United States because there's not enough lenders out there, which brings me to number three, the debt spiral. Sorry to all of you dentists, but this is where Ray Dalio says we're going to be entering a time where the United States may need to borrow money in order to pay back the interest on all the debt that we have.
The debt spiral is that part of the cycle when the debtor needs to borrow money in order to pay debt service, and it accelerates, and then everybody sees that and they don't want to hold the debt. That's where we're approaching.
Now, for full transparency, nobody, not Ray Dalio, not a random guy on YouTube, nobody can predict where our economy is going, when a recession's coming, but what we do know is that recessions are a part of our economic system. Over the last 100 years, we have seen 16 recessions. So it's not a matter of if we're gonna see another recession, the question is when, and how do you prepare and take advantage when the next recession happens? There's a lot of things that could lead to it, but you wanna be ready for whenever that time is. And the reason why this is so important is because yes, recessions cause a lot of people to hurt financially, but they also create more millionaires than any other time. Take a look, during the 2000 dot-com recession, the NASDAQ fell by over 50% before it started going back up. During the 2008 housing market crash, real estate prices fell by more than 40% before they started turning around. And then during the 2020 pandemic, we saw the fastest stock market crash in the history of time. And then we saw the fastest stock market rally in the history of time, both in the same year. The people that had a strategy, were prepared, and went against the grain were able to buy great investments at 50% off, and they were able to grow their wealth a whole lot faster. But if you want to take advantage of things when times are not good, you have to be prepared when times are good. So let's break this down. But first I want to remind you that on August 12th, 2025, I'm hosting my biggest investor workshop of the year, where I'm going to be covering how you can find investment opportunities in this changing economy through the Trump economic agendas, through technology and AI, and through the geopolitical changes that we're seeing right now, how you can invest your money better and find hidden investment opportunities before everybody else. This is a free workshop, and there's going to be so much value there. So if you are an investor and you want to be able to find these better investment opportunities, I'm inviting you to join me for free. I'm doing it twice on August 12th. Yes, it is live. Once in the morning at 10:30 a.m. Eastern Time, and again in the evening at 8 p.m. Eastern Time. So if you'd like to join, please register, because we hit capacity every single time we do this, and I have the link for you down in the description below. If you want to take advantage of the next downturn, you have to be financially prepared and emotionally prepared. And let me explain what it means to be financially prepared, because the reality is you could see an amazing investment opportunity tomorrow. The S&P 500 could be cut in half. But if you don't have any money to actually go out and buy these investments, it doesn't do you any good. So then the first thing you have to do is you gotta have some money. If you've been subscribed to my channel, you may have heard me talk about the 75-15-10 plan before, which says for every dollar that you earn from here on out, 75 cents is the maximum you can spend, 15 cents is the minimum you invest, 10 cents is the minimum that you save. Now, you have to understand which season of your finance journey you're in. If you're just getting started and you have credit card debt, you have no savings, the very first thing you gotta do is you gotta pay down your credit card debt. Then you gotta have a little bit of savings. Once you have that, and now you can start thinking about investing, this is where you have to start building a strategy for you. So I follow a strategy called ABB, but I gotta remind you, I'm just a random guy on YouTube. Investing has risks. You are never guaranteed to make money when you invest. In fact, you will lose money at some point, so make sure you always do your own due diligence and never blindly trust a random guy on YouTube. So when I invest my money, I'm doing two different things. Number one, I'm investing my money passively, and then I'm investing my money actively, and then I'm looking for opportunities. So when I talk about this passive investing, this is where I said ABB. And ABB stands for always be buying. So with this passive investing strategy, I have funds, ETFs that I want to own. They give me broad exposure to the markets, they give me cash flow, dividends, and I'm buying no matter what. I'm buying when markets are crashing, I'm buying when markets are sideways, I'm buying when markets are booming. Every week, there's money pulled out of my checkings account and is deposited into my portfolio of funds no matter what, because the first letter in ABB is A, which stands for always. Always be buying no matter what's happening in the markets. Then I have my active investing strategy. This is where I have money put aside waiting to be invested. And this is where I'm looking for what I call a market shift. I want to know where money is moving, which industries are primed to benefit. So this might be taking a look at President Trump signing a drone executive order where more money is going to be going into drone companies. That could create an investment opportunity for me. It could be seeing that more money is going to go into technology, specific technologies. That could create a potential investment opportunity for me. Again, I'm not a trader. I'm looking for where the money is moving and which industries could benefit with this money moving there. And that is where my investment money is going on my active side. It takes more time, it takes more research, it takes more work, but this is something that I am interested in, and yes, I am obviously blessed that my team here at Briefs Pro is also doing this research for me, but this is something that I am actively doing. Then I'm looking for opportunities. This is where now I have money put aside as my emergency investment fund that when things go wrong, I have this cash to be able to capitalize on investment opportunities. When the 2020 pandemic happened, I was buying. And the interesting thing about the 2020 pandemic is this was the first time I saw a market crash while I was on YouTube. And I was making videos publicly saying, hey, the markets are falling. We're seeing the craziness happen in the world. Well, I don't know what's going to happen, but I'm just going to keep buying in phases. And as I was buying, I was getting flooded with comments of people saying, Jaspreet, why in the world would you buy now? The market is collapsing. Things are going to come to an end. You should not buy now. And we didn't know what was going to happen, but I bought in phases on the way down. I kept buying more aggressively as markets fell even further. And then the Federal Reserve Bank opened up the money printer and stocks rallied at the fastest rate we've ever seen. After the 2008 crash, that was when I started to get involved with investing, and I started by investing in real estate. There was a lot of people around me that had way more money than I did, that had way more experience than I did, that had way more resources than I did, but refused to invest in real estate after the 2008 crash, because the whole sentiment was you don't buy real estate. Real estate doesn't create wealth, it creates foreclosures, it creates bankruptcies. And now that might be a very weird thing to think about, but during that time, that was the common sentiment. But it created an opportunity for me to come in and buy because nobody wanted to do it. It was not an easy thing to do because I didn't have anybody to talk to, but it created an amazing opportunity. And those properties have built me a lot of wealth today because, well, I was able to buy them for pennies on the dollar, literally. So you have to have money to be able to capitalize on the opportunities, but I don't recommend, again, this is as a random guy on YouTube, that you just wait because like Warren Buffett said, who was the greatest investor of all time, time in the market beats time in the market. You want to own the markets. Now, when bad things go wrong, it is great to have money to actually capitalize on those downturns, But when you just constantly wait for the downturn, you miss out on a lot of the upside. And this is where you have to know what is the right allocation for you, where understanding yourself. Are you going to be a passive investor, an active investor, looking for opportunities? All three, two of the three, knowing what is the game for you. But once you have some money to invest, you also have to be emotionally prepared. And this sounds easy, but the reality is this breaks even the most seasoned investors, because when things go wrong, the media tends to panic. And I'm telling you this as somebody who owns a financial media company. The traditional media loves selling greed and they love selling fear, because these are the two things that generate clicks, which means they generate ad revenue for the media companies. Why am I telling you this? Because when you are an investor, it's very easy to get caught up in the sentiment that, oh my God, the world is going to end. And then everybody starts to panic. And then that creates this fear. And then we start to see it in the stock market, because then prices start to fall or go up based off of sentiment. Well, a lot of the sentiment is driven by news, and that news can make people very emotional. And this is where there's something I want you to remember. And I want you to think about something anytime you see something bad happening in the world, especially financially. And the thing that I want you to think about is poop. P-O-O-P. Poop, because this is what you need to know if you want to be able to build wealth. You have to remember how poop works, because what poop stands for is panic leads to overselling, leads to opportunity, leads to profit. We have seen poop happen time and time and time again, and when you understand how poop works, you will have the opportunity to build wealth for yourself, because what you see happen anytime something goes wrong, people will panic. Especially when there's a lot of negative headlines coming out, people start to panic. You'll start to see it on Reddit. You'll see it on social media. People are panicking, which then leads to overselling, because now people just start to sell because they get scared. Not because maybe there's something fundamentally wrong, but because they get scared. Now, if something is fundamentally wrong, your investment's going to go bankrupt. Something is bad, sure, you got to get out. But you have to be able to recognize the difference between emotion and fundamentals. So when you start to see that overselling, this is where it also creates opportunity. Again, we saw this happen in 2022. Markets fell by 20%. We saw it happen in 2020 when the stock market fell by around 40%. We saw it happen in 2008 where housing prices fell by 40%, some places upwards of 90%, even 92%. We saw it happen in 2000 when the NASDAQ fell by 50%. That overselling through panic also created opportunity, because once things go down, then the savvy investors start to pop up and say, something smells off. Things are selling at a big discount. And that's where those opportunists can come in, assuming that they have money. If you're financially prepared, you have the money, now you can come in and capitalize on those opportunities to make the final P in poop, which is profit. But it's not going to happen overnight. The 2020 pandemic was a bit of a weird case where we saw markets fall faster than ever. Then we saw markets rise faster than ever. This is usually not how it works. After the 2008 crash happened, we saw real estate prices fall year after year after year until around 2012. That was when we saw the bottom for real estate, and then real estate prices started to go back up. After the 2000 dot-com bubble bursted, we saw the NASDAQ fall for years before it broke new record highs again. So you have to be patient. But if you're patient and you're able to buy good investment opportunities, it can set you up to build a lot of wealth. I'm telling you this from experience, but you have to be prepared, because the reality is when bad things go wrong, people tend to panic, and then they wish, oh my God, I wish I had these resources to be able to invest. But that's why I want you to prepare when times are good, because when markets are breaking record highs and you hear good news about the economy, nobody thinks about something going wrong. But that's the best time to be preparing, because when everybody assumes nothing can go wrong, something tends to go wrong. And the last piece of advice that I want to give you from a media professional is, in the financial media space, I want to remind you that things generally are not as bad as the media will make it seem. Things are also generally not as good as the media might make it seem. They're usually somewhere in the middle. Keep that in mind as you're going through the process of investing. That way you can stay calm through the noise and find the opportunity, instead of making greedy investment decisions or panic-driven investment decisions. Now again, I would love for you to join me on August 12th for my investing workshop. Again, it's completely free. where I'll be going over investing ideas that you can find in 2025. It's going to be my biggest workshop of the year, and I can't wait to see you there. President Trump signed the One Big Beautiful Bill Act into law. This big bill will bring some big changes to our economy, starting with some big tax breaks to big funding for certain things like more deportations. And the reason why you want to pay attention to this bill is because it goes into effect retroactively. It goes into effect January 1, 2025.